start a real recap about today's market action. We're looking at the E-mini S&P, the ES 5-minute chart, and we're going to use this instrument as the main vehicle to study and eventually do live trading of price action. Now, I'll also pay attention to the Forex. However, as you may be aware, if you're a Forex trader, there's so many pairs of Forex out there, Forex instruments, and it will be a little bit hard to have one common screen and one common instrument to analyze price action and have the audience focusing on the same instrument. So that's one of the primary reasons we will be using the E-mini S&P, because it's just only one. There's no, there are other variations, of course. You have the SPY and other instruments that are essentially siblings of the S&P, or this E-mini S&P is a sibling of these other instruments. In any case, this will be the main pattern, the main instrument that we will use. Now, let's just go right into it. Okay, here we're looking at pre-market action on the early hours of today. I pay attention to the pre-market hours. I know some folks just they just don't use it, don't follow it. I do, because it's my own personal belief that as much context as you can get and as pure as context as you can get, and what I mean by context is everything there is to the left of the chart. Everything that is to the left of the chart is your context. I think context is very important because that's the only thing that you really have when it comes to price action and looking at candlestick bar patterns and everything else. It's the only instrument, the only raw information that you have to determine what is going to take place to the right of that price action. Okay, so this is the context, and this context, this information right here, is going to be analyzed and studied in order to make a prediction, and why not call it a very well-educated guess of what's going to take place here on the right, because that's what this game is all about. This game, one of the main things of what this game is all about is determining what's going to happen in the next 5 minutes, 10 minutes, 1 hour, week, months, etc. However type of whichever type of time frame you happen to use on your price action analysis. I happen to be a 5-minute time frame type of analyst, if you will. It just seems to be one of my main fascinations with. Of course, I do have I keep an eye on higher time frames, like you see here in the 15-minute, 1 hour, and the daily charts. Okay, and that's as far as I go. I don't go beyond the 1 daily. I guess I'm just short time frame trader. However, but I do follow the 1 hour, and I do trades on the 1 hour. Because the 1 hour is, if you become very proficient at a 1 hour time frame trading, that's a very powerful skill to have. And remember, everything that you see here in the 5 minute, all the concepts and all the principles about understanding price action can be applied to any time frame. Okay, so this analysis and all these principles and concepts can be applied to the 1 hour, to the 15-minute, 1 hour, daily, and beyond. I just happen to just keep things a little bit more concise and a little bit simple, and just go as far as the daily chart, just to keep things a little bit simpler. Now, so let's get into it right here. Let's see what happened today here. So pre-time or pre-market hours, we're going to just let's take it from right here in this significant move here. This is Eastern time. This is around 4 o'clock in the morning to 4:30, and we're just going to take it from there and then just move on rather quickly and try to just simply run from there. Here we have a clear bear trend is coming from previous hours, and that this is a significant bearish move. There's a significant amount of energy towards the downside, and the sellers are in total control of the market direction here. Here we have a small pause and then a continuation. Now, when you see this significant size bar, whether it's a bull bear, a bear bar or a bull bar, size to me are a function of conviction. And conviction, you can call conviction energy. You can also call conviction a trend. But it's more or less kind of the same idea. There's a lot of conviction here. There's a great deal of energy here towards the selling. However, if you analyze and read a little bit about price action here, for the studies and readings I've done, one of the patterns that you look for when you see a trend is, something what's called a wedge. A wedge is typically a 3 push move, 3 to 4 or maybe even 5 push move, and you look for those because that will give you an idea where a real resistance or support level might lie. Let me make an emphasis on might. All right. So here we can take this pattern right here. Started around 2:30, 2:15, and we can go ahead and take a look here and count the number of pushes we have. 1, 2, 3, and 4. Okay, and now look at this bar right here. This is a close on the low on a bear bar, and this is a very sizable bear bar. It has 1, 2, 3, 3.5 points on the S&P, which is a very significant bar size. Okay, now when you see a pattern like this, you can call this a climatic pattern, a climatic price action. Okay, this bar right here is the culmination, obviously, because now we, of course, we have the benefit of hindsight. We can see what happened afterwards. But if you were here, let's see here, if you were at this time, this moment in time, right here, and you didn't see the right side of the chart, all you had is this. Now, if you see that bar right there, will you go against it? Will you take a fade, what's called a fade, and what I personally call a blind fade? This bar right here, if you follow, the rhetoric or the theory about price action, this wedge formation calls that after you have 3 or 4 pushes, the market will tend to reverse at least 1 to 2 legs. Okay, so here we have 1, 2, 3. 3.5, 3 legs. So if you follow that school of thought, you know, you could go and say, well, but that's a very strong bear bar closing on its low. That's a great deal of energy. Uh, but you know what? It's also a pretty good possibility that it might be a support level. Okay. Some aggressive traders would just say, you know what, I'm going to get swept into this blind fade and go on a buy here. So what they do is just take a buy stop and put it somewhere above the close. And if you do that, then obviously whenever the market comes back, you will get, your buy stop order will be filled, and then you would embark on the you know, the reversal, if you will, and the starting or of a new trend, and a new bull trend, a reversal trend. Pardon my, you know, my English is a little bit. I haven't spoken in such a length for a while, so but I guarantee you, with time, if I keep doing this, I'll become a very articulate English speaker, and I also hablo español, and I will eventually do this same analysis en español también. So that's just to give you a heads up. Now, if I was here, I would be a very aggressive trader and just buy this bar. A more conservative trader would be, you know what, this is a very strong bear trend. I know this is a very good chance that this is a support level right here. So given all this energy here, I'm just gonna wait and see and look for evidence, and you know, try to re-engage in the bear trend at the 20 period moving average or the 50 period moving average. I'll be more, you know, how do I put it? I could breathe a little easier doing that than just going on a blind fade here, because this looks like this market is going to keep going lower and lower. Who knows how far? And you know, you also have to take in considerations what may be driving this price action here. Why may be driving the prices to keep going lower and lower, and find you know, the news are relevant. Okay, so that's why you always want to have a source of news, or have a schedule of what news are due to come out, whether earnings or Fed minutes or whatever. Okay, so if it isn't driven by a news item or something of that matter, if it's just pure price action, and I can cancel any other anomalies that may be driving this price action in this fashion here, I will be a gambler. Yes, you can say the word, because this would be a gamble. All right. If you do the conservative trading idea here, re-engaging on the trend here or here, then yeah, that would be a more analyst type of approach, or the conservative type of approach. But here, obviously, this is a gamble. This is a guess, educated guess, with a 50-50 probability here, I would say. And you know, you just, that will be just the style, you know, that will be aggressive. Okay, so now we went ahead and did that. Let's see, where is it? Okay, right there. So 1, 2, 3, 4, right? That's where we were, right? Yes. And this is bar. Well, I had the bars enumerated, but this program before market hours has a negative, so I'll have to correct that. But in any case, at least we have an ability to label this bar here. This bar minus 48. So here, once you, if you went in here and got swept into the trade with a buy stop here, well, yeah, your logic worked. Your logic appears to be accurate. Okay, and then you have a continuation of this correction here. However, by all means, the inertia, and that's a very important word to remember, the inertia of the market is with the bears at this point here. And one very simple, quick uh, point or evidence that we can use here is by the simple fact that the market has not reached the open of this bar minus 47 here. Okay, so let's see. Then we had a pause here from the correction by the bulls. These are simply bears cashing in profits. Okay, that's all this is. This is by no means indicating that we're going to have a bull trend just right out of the get-go from here, because this is a very strong selling energy. So let's see how far the bulls or the bears. This is really bear made bull bars. I don't know if that makes sense. These are simply bears who shorted from here or who shorted from here, who are just cashing in the profits, particularly those who are above, who got in above these price levels right here, above 2037. Okay, and now here, bar minus 42. This is a very important key bar because it's a strong bull bar. It's got a significant amount of buyers going in here, but the main factor here is, guess what? Not only defeated the open, it defeated the high of this main bear bar here. Okay, but remember, we are approaching a resistance level, which is the 20 period moving average, and those are very handy. These are the only two moving averages that I use on my charts. I try to keep it as clean, by the way, not to forget about what I'm talking about, but it's also, since I'm mentioning moving averages and signals and indicators, this is it. I only use the 50-minute and the 20-minute moving averages, and that is it. Everything else is pure candlestick bars. And of course, you can see I have designed some algorithms, if you will, that helps me with my eyes on the price action, just to identify certain bar formations in certain points, certain places during the price action in the chart. And that's why you see here these colorations here. These bars right here, this yellow and this blue, are clear indications of support evidence, because since we are in a bear trend, when these bars come to be, we have good signs of support here. These two bars here are essentially bear made bull bars because they're taking profits. Here, these two bars are essentially 40 minus 46 and minus 45 are more indications that this energy is dissipating and going away, basically. And with this bar right here, now we're starting to consider the fact that, maybe a reversal might be in order. However, we have this big obstacle here, and if we defeat this obstacle here with convincing evidence, then yes, we can say, well, yes, the bull trend is in order. So let's see what happened here. This still a very also just a pause for either side. Here the market is looking for direction. It's starting to assemble to look like a triangle here, if you can look at it that way. If you take a trend bar that goes from here or from here to here, and then obviously from here, from minus 40, what is that? Minus 48 towards minus 42, you can see this is a triangle formation. And whenever you see this pattern here, all this is saying is, the market's taking a breather, is regaining its energy, and it's going to take a direction one way or the other, whether it's higher or lower, but it's going to definitely make a significant move. What we want to do here is try to use the price action analysis and try to come out with the most educated guess that we can come up with, and give a probability, assign a probability of accuracy towards a move going up or towards a move going down. Here at this point, it's clearly that the bear trend might be ending here, and at best at this point we're going to have a trading range. In other words, we're going to have sideways market action here. Okay, so we move again, we have a pause here again. This is a sign of uncertainty. The market doesn't know where it wants to go next, whether it's higher or lower, who has the momentum here. I still believe the bears have the inertia with them here. However, every bar that doesn't show evidence towards a bear continuation of the trend, the less the inertia stays with the bears. And it doesn't necessarily mean it's changing for the bulls, but it's just simply stating that the inertia is just basically going sideways. It's got no direction. It's directionless right now. Here we went over the next two bars here, but here we have a clear sign not only of support, but this bar right here, when you have this formation here, and as you can see here, it's colored because I have it, I have certain conditions that once are met, this bar is going to be colored in yellow here, and this is telling me, bullish energy is building up. That's what this bar here it means. Bar minus 38. Bullish energy is building up. So one thing that when I start seeing this accumulation of of how many bull bars we have, 1, 2, 3, 4, 5, and 6. How many bear bars we have? 1, 2, 3. That's half. How many directionalist bars or dojis we have? 2. Clearly the bears do not have command here at this point. Okay, now here, boom, we have a very significant bullish bar. Is not only is significant for many reasons, it went over the highs of all these bars here. It went over all these bars here. We're going back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 times 5, that's almost an hour, right? For the past hour, this bar here went higher for the past, almost the past hour. So clearly, with this bar here, not only piercing through the 20-period moving average, but closing on its high, it's game time for the bulls. So bulls here pretty much have the inertia with them right now. Now, so remember, if you gamble here, and that's fair to call it gamble, because when you have this and you say, I want to go against it, many would say, what, there's a falling knife here, you want to catch it? Okay, sure. I'm gonna just justify that rationale by using the wedge pattern, which we have here. So we're gonna get a buy stop, get swept into, and if we get in here, I usually go halfway of the bar here, so which would be about this level right here, and put the sell stop one tick below the low. So here clearly the bulls, have the inertia, and so if you're still out here and you want to, let's say, okay, now, well, what about this energy here? You said that if there was a pullback to the moving average after this bear trend and this bear energy, shouldn't we engage in buy and short again the re-engage with the bear trend? Yes, but the context. Okay, you still now if you still want to do that, that would be considered also a gamble. Okay, that would be considered another blind faith, especially because this bar here closed on its high. And remember, bears make their profits here, make their positions here, and if they start seeing that the more the market goes against their positions, they want to start to get out of their positions and just capitalize on whatever profits they have. Because when you have profits, you want to be able to capitalize as much as you can. But of course, oh well, but you know what? I don't want to leave money on the table. I want to take a little, I want to take as much as possible. Well, yeah, that's a fair point. However, this this instrument, this game here is about, which is really about, is about trade management. Okay, and in my own personal and humble opinion, trade management is a function of your psychological, emotional state along with your account size. Okay, and we'll get back into that and we'll talk more about that and I will explain more precisely what that means. Now here, okay, yeah, so let's get back into the bear trend. Let's take it. I mean, this thing is clearly you know showing up as a very strong bear trend, and maybe wanna gamble here, wanna re-engage with it. Things have changed here for several reasons. We have too much buying pressure accumulated already here. There's a long time where we have seen any bears showing evidence that they're ready to re-engage with the bear trend here. We'll see with the next bar, but in any case, when you see here, when you see this, now if you are I would say a reasonable position would be to buy here, wait for the market to come back here again, or buy here somewhere after this bar close. If you can get in and buy, that will be fine as long as you put a stop, a sell stop, one tick below the low of bar minus 38. Okay, that would be to me a reasonable entry. But guess what? Clearly, if you didn't buy here and you put your buying limit here, then well, we missed the train here. But clearly this is a bona fide bull trend with the inertia on the side of the bulls undeniably here. Okay, now we also going to talk about eventually, but I don't want to get into too many details right now because it's the first video and this is the very first time I'm doing this, and and this is really, again, this is a test. I don't know how many people are going to watch this, but there's also a point to be made about the relationship between these two moving averages here. As you can see here, the 50 moving average is being higher or above the 20 period moving average. There has not been a cross from the 20 period over the 50 period. When that happens, this signal right here will turn green. Right now, it keeps saying that the sentiment of the overall market is still bearish, and it's fair to say yes, it could be. As long as we stay below the high of bar minus 59, will remain in a bearish breath. At the moment that we go above it, this the trend is with the bulls. Okay, I know I said here is the inertia is with the bull. Clearly, inertia is with the bull, but inertia is more like a momentaneous or a temporary um, sentiment, if you will, and it's been carrying the bulls. It's been carried by the bulls at this so far. At the moment we see a cross, and that will be way after. This is a lagging indicator. This, the moving average, is a lagging. It will be after the fact. Price action, if you understand price action, will be way ahead of whatever moving average relationships you happen to use. If you understand price action will give you the fastest indication of what is taking place. The moving averages are nothing more than confirmation of what you have already determined to be with price action. Okay, so here clear we are in a bullish, I would say we are in the start of a bullish trend, no doubt about it. And this is just a breather here. It closed on its low, but it didn't reach below the low of this bar here. So clearly momentum remains, or inertia remains with the bulls. Okay. Same. Now here is more or less confirmation that this right here, this would be a buying opportunity. Obviously, I should have mentioned that. Well, if this is a new bull trend and this bar went above the 20 period moving average and closed on its high, well, it would be logical to try to get into that trend at the moving average. See, the 20 period moving average and the 50 period moving average as well, they are what would be the word, points of reference of where price action can be strategies of price action can be implemented, mainly entry points. Okay, here if I saw this, I saw, wow, this is buying pressure accumulating, definitely buying pressure accumulating. Okay, I'm confirmed, I'm good, I'm gonna buy. Where is a good place to buy and a recent new bull trend? Well, moving average. So if you can buy here or close to the low of this bar, I would definitely go in there. I would say, let's say I just try to buy as close as to the moving average as possible, and use a stop probably in this bar to the low, one tick below this bar if you conservative, or you can go one tick below this bar here if you moderate, and one tick below this bar if you have the capacity, and you conservative too. Well, but yeah, you will have to have certain resources to be able to stomach if the market moves this much against you. If you go in here and you put a stop here, okay, but definitely it's very reasonable, very reasonable. This is a buying zone here, okay, whether it's somewhere here, somewhere here, somewhere here, that's a buying zone here. Okay, again we have continuation of the bull trend. Now see what happened here. It approached the 50 moving average, and those folks who believe, you know what, the 50 moving average is going to be a period to re-engage with the bear trend. Okay, however, it is being clear presented to us that the bulls have the inertia here. We have only two solid bear bars. However, there's just simply too much buying pressure here. So there's very likely with this price action that we had thus far, price is going to be higher. It's just simple as that. Here is another buying opportunity. I just buy here. Okay. Same here. Remember, you could have made a stop here, and yeah, you could have made a stop here, stop here, stop here if you're winning here. if you bought after this bar here, you could scalp. But if you're a swing trader, you would put a stop here and use and wait for the market to reach out higher. There's clearly a very good probability that the market is going to reach higher levels here. And this is one little trick that I learned from certain authors here and there. This is a 50-minute chart, and what I like to do here is I like to take I guess we can use this one here. I like to take projections of the price action here, and projections will give me an idea of what might be a probable extension of the future price action here. How far can the price action go? Well, we can do that here, or I think is this one here. I'm not entirely sure here. We'll see. And bear with me here for just a second. I guess I should have done this in the 5-minute chart. I don't know why I'm doing it in the 15-minute chart, but not an issue. So let's see. Right, well. Okay, so now we have a projection that is going to go here. It's going to go from this low to the maximum high of this bull trend here. So I will do a projection here, and then I'm going to leave it there, and that will give me an idea of how far, if I'm still in a long here or long here somewhere. Once I determined that the bulls have the inertia, this is a potential target, a potential measure movement. That's one of the words that you'll hear there. It's a projection of how far this accumulation can expand here. Okay, so we'll see. So if I'm here, if I got in here, I probably got stopped out because I put a stop here. And if I got here and I put a stop here, I'm still in the game. And if I put a stop here, definitely here in the game. So these are more or less swing positions. These stops right here would be considered scalp positions. So because they are more short burst of price action, going in and getting out quickly with profits, but not as significant size profits, but nonetheless profits. Here, that's a very good sign for the bulls. And so if you're here, wow, you're feeling great. You're feeling great. Here you got stopped out, but again, if you got in here, you were a scalper, and you should have taken some profits here when you saw this here. Okay, so this is a very good sign for the bulls. So here again, we're gonna have a pretty good chance that somewhere in here, I tend to use about halfway of this projection as a reasonable target, something like that, and that's just going by the eye. All right, so again, and that's a very good sign for the bulls, and we have a very good chance to hit our first target here. Again, we're looking very if you're a bull, you're doing fine. Here clearly after this move here, this notion of re-engaging with the bear trend after these two bars right here, minus 28 and minus 20, what is that, 7, is completely disbanded. That's no longer a valid notion that we can continue in a bear trend. This is a complete reversal now. After these two bars here, there's no doubt at all that we are in a bull trend and we're going to continue to go higher. Absolutely no doubt. Okay. We have a correction here. Still with, yeah, we can still say that we're not we're in a sideways market here. However, after this significant, well, this is significant, this is a very significant, but see, you have two dojis here, and then you have a well, significant doji. I would say this is bar. This is indecision here, and then we have this bull bar here, and this bull bar is close to the highest level thus far. So clearly, with this bull bar present here, inertia will remain with the bulls. That's it. And then this one is significant here because you have bears trying to re-engage and retake the control of the market, but bulls are more than ready to just move price higher here. And this is just a breather market without certainty. These are bears trying to retake direction of the market. Let's see what the bull have to say. And this is again, but remember, if you take this snap right here, this section right here, all this is a trading range. In trading range, there's no real clear direction at this point. So even though we have this sideways here, I still have the inertia going with the bulls, because when you have a bull bar, they seem to be quite significant. Okay, it takes a little bit more work by the bears to bring the market down than compared to the effort of the bulls to take the market up. So let's see what keeps happening here. Here, if you are a swing trader, you're just holding on to your positions here. Okay, you wanna see what happens next. And again, here, this is a very important sign here. This bar right here, after we have this signal, this is clearly the bulls, part, my friends, giving the finger to the bears. So you know what, we're not going to let you take this market down any lower. We have too much vested interest from here. We work very hard to return, to go against this here, and we're going to fight to keep it. We're going to have our, our prices move higher because we're gonna fight for that. That's what the bulls are doing here. That's what this bar means here. This is a very rebellious bar for the bears. This is bad news for the bears here. And another thing that I want to bring to your attention, as you can see here, the two moving averages are approaching, are coming closer to each other. And this is not only an indication that we are clearly in a sideways market, but after this bar here and this gap closing between the 50 and the 20 period averages, once this moving average touches or goes over, that's pretty much all said and done for the bears. The bulls will have complete control, but that will be just a confirmation of that. Again, bulls and bulls all the way and bulls all the way. So yeah, here we hit the first target, as you can see. Now remember, this was a guesstimation here, but the potential to hit this target here after this price action is clear. Okay, now what time is it? It's 8:30. Now there's also emphasis at 8:30 you have news items, pre-market news items come out around 8:30. So this could be also be driven by news. However, nonetheless, price action is price action. And with these bars right here, and with the defeating of this high here by the bears, we're clearly in a bull trend. So this market is screaming for buying. And here we have that crossing that I mentioned earlier. We are in a bona fide bull trend right now. Okay, this is just a confirmation of what this bar did and what this bar did here and this bar here did. We had a hesitation, which is normal, and also this could be, I don't know if there were any news expected at this time. This could also be a reflection of waiting game, waiting for the 8:30 time to come up, and that's probably something news related here that drove this bar right here. So once the news came out or didn't, the hurdle was was clear, and the traders and the bots, people and the machines decided, you know what, we're going to continue with a bull trade here. So let's see what happens. And yes, we have more bullish price action all the way to the opening. This is the opening here, 9:30, and yeah, we clearly did confirm we hit our target here from that projection. And obviously, one of the very cliche plays of the opening is to fade the opening here. As you can see here, once the bulls realize, okay, yeah, we did had a very nice run, but guess what? The market's going to open up 9:30. Want to collect some profits, and that these are bear bars made by the bulls taking profits. And we had some of that 10 minutes before the opening, and then we had a pause here, and then the market opened, it went down, and the cliche play, which is to fade the open. So if you understand that play, well, that's a very nice play to master, because you could if you do this right, once the market open and you fade it properly, you understand how to do that, that's it. You made all your money for the day within 10 to 15 minutes. And then, you know what, my friend, if you can do that, you have absolutely no reason to stay in the computer in front of it. You have all the reason in the world, if you did this right, to close your screen, shut out your computer, and go do something else. Okay, because that's just, that's how I believe. Okay, if you made all your profits for the day, by all means, if you understand how to do this here, by all means, close down your computer and go play golf or swim or walk the dog or something like that, whatever. Okay, and then yeah, guess what, we hit our target also here. Okay, so now that's all I'm going to cover today. This is again a test, this channel. I wanted to start this. My goal is to do this live stream, and I'm trying to figure out how to do this properly. Obviously, latency and delays are a factor here. You have to have as close to real time as possible. But again, YouTube is free, and you pay what you get. You get for what you pay. What is it? Yeah, something like that. If it is free, well, it's probably not going to be as good as when you pay for it. So, but that's the trick. Try to beat the game. Try to win the game by doing this, doing what you love, what you're passionate about, and with a minimal marginal cost. So we'll see how that goes. Okay. Again, that's just a quick run, testing the system, testing the screen, testing the volume, everything. And again, my name is Alejandro, and I hope to hear from you guys again. Please subscribe and wait up for the next video and for more news. Okay. All right. Thank you. I want to thank you.